What's up everybody? Welcome to the Stocks channel. We're continuing to see the indices climbing higher and we are getting very close to my critical price targets. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Also, because it's the weekend, we will take a look at the bank account, which we can see is very flat on the week, only going up 0.04%. This just shows how flat this market is with this low volatility, and for the 1 month performance, we're still up 1.39%. So remember that volatility is likely coming, and our bank trade alerts data does tell us that August and September are typically very volatile with an average of 7 trade alerts per month. So it's very likely, according to our data, that volatility is right around the corner. So now could be the best time to think about trying out bank trade alerts. Remember, I have a 50% off promo code for your first month, so you can find out all of the details about bank trade alerts in the description below. Alright, jumping back over to SPY, we can see we were up 0.18% and we're extremely close to that price target that I have at 446, which, as I always remind you, any one of my price targets could lead to a pullback or possibly even a stock market correction. So please treat 446 resistance with the respect that it deserves. And if you're over leveraged or you're way too exposed to the long side, now is the time to start thinking about taking off some risk and starting to think about raising some cash. Remember, I never suggest shorting a bull market, so don't just think because we're at resistance it's time to short this bull market. That's absolutely not the message I'm trying to deliver. Just reduce your risk and raise some cash, because if you don't have cash, you're not going to be able to buy the dip. This is still a strong bull market, so it is still a buy the dip market until we see something changing in the strong bull market, and we always will continue to do that macro technical analysis on the weekends, so you can understand the broad stock market and how strong the bull trend really is. So if we do see a continuation of this push and we break through resistance, I want you to look for that next price target above at 449, but please do not disrespect this resistance level at 446 because it is fairly likely going to be a strong resistance area. Remember, the last resistance I told you about was 441, and we had a lot of trouble breaking through that level. And if you were locking in profits, you had plenty of buy the dip opportunities to capitalize on that trading. So be disciplined and understand we are coming into this critical resistance, and we do still have critical support below at 441, and our 20 simple moving average is now going to be right around 440. Remember, we need to close below 440 to start seeing this market rolling over, and our strong support at 441 would be an early warning sign that the market is starting to break down. But right now, price action is well above a positive sloping 5 EMA, and we still have a very strong bull trend. So stay the course and continue to stay a bull in this bull market until we see something shift. In the NASDAQ 100 triple Qs, we were up 0.35% today, and we are seeing tech bouncing off of that critical support level that we did test 2 days ago. Remember, the critical support is our 20 simple moving average in this bull market, and that was support at 365, and we did see a strong bounce off that level, and the price action is back over a positive sloping 5 EMA. We still have the strong bull trend, so the triple Qs look like they could push higher from here. Now, I do want you to be cautious on the triple Qs, because we are forming a lower high at this time, and typically speaking, in a market that is running out of momentum, you will start to see the market rolling over and we will fail to break out above this previous high. So watch that level just above 369 and just below 370.5, because if we fail to close above that level, it's very possible we already saw the top in the triple Qs and we're getting ready to roll over. So if we close below about 366, that's your critical support, and that would mean the triple Qs are likely rolling over. However, if we continue to climb higher, the next price target is 370.5, and above that, the triple Qs could run to 376. So remember, price action is king, and if you're paying attention to the price action, all you need to do is watch critical support and resistance to know which direction this market's going to go. If we're bullish, we're going to break out above 370, and if we're bearish, we're going to break down below about 366. So draw your lines in the sand at those price targets and stay objective, because as long as we're between those targets, you need to remain bullish. You cannot get bearish on a bull market just because it's going higher, because a bull market can and probably will continue to go higher. That's why it's called a bull market and continues to form all-time highs. So if you're shorting at these levels, make sure you're taking your profits and wait for a confirmation of the market to roll over before you start going long on a short position, because the market has to roll over and show some weakness to profit from a short position. Go with the direction of the trend, and right now the trend is still bullish, so price action is still biased to the upside. On the Dow Jones, we were up 0.05% today, and we did see the Dow Jones reclaim the resistance level as potential support. We did get a breakout and we closed right on top of that resistance level, basically to the penny, so that level could act as support, or we could break down and come down to close the gap at 353. The critical support for the Dow Jones is 351, and our 20 simple moving average is just below at 350. If we break below 350, it'll look like we're rolling over and we could retest the 50 EMA around 347. If we continue to break out, your next price target on the Dow Jones is up here at 359. On the Russell 2000, we were down 0.91% today, and we still see the Russell 2000 struggling around this 50 EMA. Even though we did close above that level for 2 days in a row, we're back below that 50 EMA, but we are holding above a positive sloping 20 simple moving average. So it's possible the Russell 2000 is reversing this bearish market, and we're going to see this 20 simple moving average continue to rise, and we will see the price action using that to climb higher. So watch that as a potential opportunity for that 20 simple moving average to start pushing the Russell 2000 higher. And if we can get back over the 50 EMA with a positive sloping 20 simple moving average, I do think the Russell 2000 will be looking a lot more bullish, and we could easily get back to that resistance level at 227. So look for price action that looks a lot like what I just drew here, because that is a very possible scenario, and it's more than likely what could be playing out as long as the Russell 2000 is over that critical support at 220. So as far as the Russell 2000, watch resistance at 222 and that breakout level above the 50 EMA around 223. And if we get back above 223, it could be the time that we actually do start running to 227. If we break below 220, look out below for support at 219 and 215. On the Arkk ETF, we were down 1.44%, and we did see Arkk closing below the 50 EMA and right on top of our critical support at 120. We're losing the bullish trend, and we are below the 50 EMA, so we could be losing the bull market in the Arkk ETF. However, we're at critical support, so you always have to give benefit of the doubt to the bulls when price action is sitting at support, because there's always the possibility they buy the dip. So if we see a bounce off 120, look for support at 123 and 126, and above 126 we have support at 128 and 131. If we break below 120, look out below, because we're likely coming back down to support at 115. On the VIX, we were down 0.77%, and we continue to see the VIX getting crushed, heading to new lows, and that is helping drive the market to brand new all-time highs. Remember, low VIX is low fear, and low fear is more all-time highs, and we are seeing the VIX continue to head lower. The lower we go with the VIX, it does increase the probability we could see a volatility spike. So as we go higher, I do want you to get more cautious and start raising some cash. Watch the VIX next support level around 15, because we could bounce off that and try to attempt to break out above 18.2. We see the VIX getting above 18.2, that's your early warning sign of a pullback. And if you see the VIX breaking out above 20 and then closing above 23, that's your warning sign that we're likely due for a stock market correction. So watch the VIX, because it's going to tell you a lot at these levels. On Bitcoin, we're currently down just over 2%, and Bitcoin is getting very close to my price target up here at 51,000. Remember, once we get to 51,000, it increases the chance that we could see a pullback, so that could be a great time to take some profits. However, I do think Bitcoin is going to new all-time highs before the end of the year, so if you're in it for the long haul and you don't mind holding through some volatile pullbacks, this could be an opportunity to continue to hold your Bitcoin. If we break above 51,000, we could start running back to 60,000, but respect that resistance level until we can break above it. To the downside, you have support at 45,000 and 43,000, and if we break below this 20 simple moving average, we could come back down to the 50 EMA right around 40,000. So you have a ton of support below on Bitcoin with a very strong bull trend, so I still want you to remain bullish on Bitcoin at this time. On Amazon stock, we were down about 0.29% today, and we're still holding over that critical support at 32.80, and we're still below resistance at 33.11. Amazon looks extremely weak, but we are holding this critical support, and we're very close to having a bear trend if that 20 simple moving average crosses below the 50 EMA. We have a huge gap to fill above, but we need to start breaking through some resistance before we even consider closing that gap. Watch resistance at 33.11, 33.75, 3400, the 50 EMA at 34.40, and our 3500 resistance. There's a ton of resistance Amazon is going to have to break back above to regain that bullish trend. If we break below 32.80, look out below, because the next support level is 32.08. On Tesla stock, we were down 0.7% today, but we still see Tesla holding that breakout level. Remember, we closed above 715, and now we're holding above that level as support, and our next price targets are 732 and 765. We have a strong bull trend, so it's very likely we're going to continue to go higher. So be patient on Tesla, because it still looks bullish and it still looks like it's going to reach our price targets. Above 732, we could have a quick trip to the price target at 765. To the downside, look for support at 715, 692, and our 20 simple moving average at 685. We need to break below 685 to start seeing this Tesla bull market rolling over. On Apple stock, we were up 0.14% today, and we are seeing Apple starting to break out of this consolidation wedge to the bull side. Remember, we need to break out above 149, and we're very close to doing that, but that will be a strong resistance level. Above 149, we should start running to our next price target at 156. Downside support will be 148, the 20 simple moving average at 146.5, and our support breakout level around 145. If we break out below 145, we still have support at 143 and the 50 EMA at 141. The financial sector was down 0.75% today, but we do see the financial sector back into a full bull market with a huge gap to fill below. As long as we're in this bull market, the financial sector will be a buy the dip scenario, so start watching this sector for potential strength in the next quarter. In the industrials, we are down 0.31% today, and again, we're starting to see strength returning to the industrials with bullish price action and a bullish trend, so we could see industrials doing very well coming up in the next quarter. The healthcare sector is up 0.62% today, back over the 5 EMA and still in the bull trend, but we have been seeing a very bullish healthcare sector for a while now. So its potential money will rotate out of healthcare and start running into financials and industrials going into the next quarter. The energy sector was down 1.18% and still closing over that 20 simple moving average. And it's still very possible the energy sector is building a base and getting ready to start climbing higher on a positive sloping 20 simple moving average. So look for the potential opportunity that the energy sector is going back into a bull market in the very near future. So jumping back over to the S&P 500, we can definitely see a lot of strength in the sectors, in the financials, industrials, and the tech sector. This is why we see SPY continuing to climb higher, even though it is on very low volatility and it is a very low volume melt up. Remember, we have strong resistance at 446, and if we can break out, our next price target will be 449. Respect these resistance levels and be cautious as we climb higher because risk always increases the higher we go. I don't want you shorting a bull market, so stay the course and remain a bull in this bull market and wait for a confirmation price action breakdown before we say this market's rolling over. It's important to stay objective and follow the price action and the trend and never try to call a top in a bull market. Remember that I have my own trade alert service called BANC Trade Alerts that only trades TQQQs, and it's very simple to follow and does well in all market conditions. It's very likely volatility is right around the corner, and BANC Trade Alerts does very well in volatile markets. I'm running a 50% off promo code for your first month, so now could be the best time to try it out. You can find out all of the details on how to join BANC Trade Alerts in the description below. I also have this Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.